Welcome to Informed Investor. India's railway king, the Indian Railway Catering and Tourism Corporation, or in short, IRCTC, has been making quite some noise recently. Shares of IRCTC have been in the fast lane and are hitting a new 52-week high of around 900 levels and delivering an impressive 40% returns so far in the year 2023. Before we decode the reasons behind this surge, let's understand the business of IRCTC. So basically, IRCTC is a public sector enterprise in which the government of India holds a majority stake of 87.4%. It maintains a monopoly and is the only entity authorized by the Indian Railways to provide online tickets, catering services to railways and packaged drinking water at all railway stations. When looked at the breakup, a majority chunk of about 43% of the revenue comes from catering services, followed by internet ticketing services, which generate about 32.8%, which includes ticket booking through its platform Rail Connect. The remaining 24% of the revenue is generated through their packaged water brand called Rail Neer. And lastly, the travel and tourism, which encompasses budget and deluxe package tours for foreign and domestic tourists. The financials of IRCTC also paint an interesting picture. When looked at the most recent performance in the second quarter of fiscal year 24, the company reported a revenue of 995 crores, an impressive growth of 23.5% from the year ago quarter. EBITDA also witnessed healthy improvement to 367 crore, a growth of 20%. Even the EBITDA margins were healthy and remained consistent. When looked at the bottom line, the company reported a net profit of 295 crores, a growth of a massive 30% from the previous year's second quarter. The PAT margins also remained healthy around the 30% mark. So let's understand the reasons behind the recent surge in IRCTC. Before we begin, let's do a quick roundup of IRCTC's journey. IRCTC went public with its IPO in September 2019, giving a return of over 100% to its investors on the listing day itself. And since it exhibits a monopoly in the industry, it has provided stellar returns since then, amassing about 450% returns since its debut on the stock exchanges. However, it did have a lot of ups and downs with the pandemic, as there were several travel-related restrictions which ultimately led to halting operations. But as restrictions eased, IRCTC soon hit all-time highs as the financials improved and investors were optimistic about the future growth of the company. Fast forward to now, IRCTC has hit its 52-week high and has witnessed a significant surge. One of the most recent developments is that IRCTC plans to expand its catering business. While they already provide catering services for various ministries and autonomous bodies, they are significantly looking to scale up its catering business. Remember, we spoke that a majority chunk, almost 44% revenue, comes from the catering segment. And IRCTC have already signed memorandum of understandings with various government bodies, including defense establishments such as Border Security Force and Indian Maritime University in Kolkata, and with several others in the pipeline. Interestingly, IRCTC has also tied up with Zomato. Post-pandemic, travel demand has rebounded strongly in India, leading to more train bookings and a substantial expansion in passenger traffic, thereby leading to higher catering and ticketing revenues for IRCTC. The overall bullish sentiment in the Indian stock market, along with monopoly it exhibits, also contributes to IRCTC's rise. Apart from these factors, the Indian government's comprehensive initiatives and increased funding have accelerated infrastructure improvement in the Indian Railways with several schemes like the Gati Shakti, Amrit Bharat Station scheme, and importantly, the Union Budget of 23-24 allocating a massive 2.4 trillion budget to enhance nationwide infrastructure, all of which bodes well for IRCTC. In conclusion, IRCTC enjoys monopoly granted to it by the Ministry of Railways, which further boosts its growth. With several technological advancements and introduction of premium trains like Vande Bharat and Tejas Express Premium, it further offers lucrative catering contracts for IRCTC. The only threat that IRCTC faces is the privatization of railway services. But what do you think? Could IRCTC become one of India's most successful public sector enterprises in the future? Do let us know in the comments. Having said that, this is me, Ralston, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.